A few of the common mistakes, and give you a couple. The first one that we see way too often is sales and finance not on the same page. The sales staff is out there doing their best to sell the products and not really having a full understanding of the various financial payment terms. And the importers generally are going to be much more knowledgeable about these things. We've seen many times where a salesman for a company who's exporting to, let's say, China, will agree to a letter of credit, and they'll agree to a letter of credit that has a term in it. Maybe it's a 60-day term. And this wasn't what finance had agreed to. And again, that 60-day term means that when the product is shipped out, there's no money coming in for 60 days. So how is that going to impact the company from a cash flow standpoint? If it's a significant order for a small company, $100,000, $200,000, and that's not going to be there for 60 days, and again, you aren't able to borrow against that, that's going to have a major impact. So for the finance team, it's critical for them to educate the sales team on the various payment areas. And again, that's something that we are typically able to do. We do a lot of in-house one-on-one seminars for our customers to educate them on those programs. The second mistake is offering a specific trade product and not really understanding what you're offering and not having a good understanding of, especially with a letter of credit, of what is needed. We have seen many times where a customer of ours will receive a letter of credit and they don't know what to do. They don't know how to prepare the documents. They don't understand what documents they need. They really don't understand the instrument in general. They're offering the letter of credit as a payment term, but they really don't have a firm understanding. This is where we can come in again, educate the customers, do one-on-one seminars, ensure that they know and understand these things in advance. We'll also review the letter of credit with them and let them know exactly what they need to do. And this goes for any size company. We've seen companies in the $400 or $500 million range struggle with these, and we've seen small $1 to $2 million a year sales companies struggle. And one more mistake would be just not reaching out in time, waiting until the last minute to contact the bank when you have a potential deal. If you're looking at a Ex-Im Bank or an SBA working capital line of credit, that's going to take a little bit of time. There's an internal procedure that the bank has to do, and there's some external work that we need to get done with Ex-Im and SBA. It's not a large amount of time, but it may take a couple weeks, 2 to 3 weeks potentially, to get something like that done. And if you're new to that bank, it's going to take even longer. So if you are a company that's looking to do export, I strongly suggest that you identify a commercial bank that has a trade finance area and at least have the conversation.